think it's a combination of both. We think that COVID will lead to some companies repositioning for growth. We'll see some companies need to take strategic action defensively. And then we'll also see just some great deals that frankly have been discussed and talked about over the last 12 to 24 months, which are consummating now in a very attractive financing market. So you're right, we've seen a low point in terms of M&A volumes for the first 8 months of the year, but we're definitely seeing a pickup in engagement right now.
What about the role of private equity? We knew coming into this crisis that private equity was sitting on record dry powder. They had been getting active with a big jump in public to private transactions. Are we seeing private equity get into this market now in a big way? And do you see them being a major driver in the months ahead?
It's an interesting point. We do believe that private equity will be active. It's remarkable how much has happened to valuations in such a small period of time. So when we look at the S&P today trading at next 12 months earnings of 22.9 times, there's been an aggressive rally across asset classes. So some of private equity will be sitting there today thinking, I had a lot of cash coming into this. This was potentially a big value opportunity, and have valuations run away? And will we see a reset because we're not through COVID right now? So I think that's what's weighing on private equity's minds at the moment. Having said that, the financing markets are attractive. Spreads have tightened meaningfully. The financing market is open. So it's really about where are the ideas, where are the opportunities? And yes, I think private equity will be busy as we go forward.
Phil, one of the things that has raised a few eyebrows, particularly here in the UK, is that private equity has turned up with a begging bowl to government over the businesses that it owns, which it has leveraged, which are now struggling with COVID. We know private equity has had a terrific decade where perhaps the IPO market has not. Is there any prospect that we might see a pickup in IPO activity at the expense of private equity as perhaps they tarnish their own image going forward?
I think sellers have a lot of opportunities today. So there's an IPO path, and the IPO market's not been perfect over the last 24 months, but for some companies and for some sellers, it's the right path to take. There's always the strategic angle. There's always private equity. And there's also now another competitor, which is the SPAC, which are blind pool cash vehicles looking for opportunities. So sellers in today's market have a lot of alternatives. We think that is healthy. We think that provides a healthy level of competition. It's good from a seller's perspective. And they've got a lot of flexibility in order to choose the right path for them.
Let me ask you, I mean, I know you're in the business and this is what you guys make money from, but isn't the SPAC really the product of too cheap money and will only bring further misallocation of capital at this point?
I think there have been some very successful back-end combinations as it relates to SPACs. I think when you look at the sponsors today and you look at the quality and you look at the size of the capital raises, we believe that SPACs are here to stay. They offer a very interesting alternative for sellers in order to seamlessly and efficiently access the public capital markets as an alternative to the IPO. It's not right for every seller, but in certain situations, it absolutely makes sense. So we think the contrary. We think SPACs are becoming increasingly main street and provide another capital formation opportunity.